There we go. Hello, everyone, and welcome. I'm Janice, and I'm the director of the Low Income Taxpayer Clinic here at Maryland Volunteer Lawyer Service. I want to thank you for joining us. We are very lucky to have Michael Mourges speaking with us, and I'll let him tell you a little bit more about himself in a moment. But first, I'm going to ask everybody to follow us on social media, and I want to invite you to check out our new logo. We have a new logo. MVLS is 40 years old this year, so we are celebrating with a new look. Still same great work, but a new logo, and we'll be having lots of activities to celebrate throughout the year. So thank you for joining us today, and thank you for being a part of MVLS. Michael, if you'll please move to the next slide. Great. So if you are not already a volunteer, we do invite you to become an MVLS volunteer. It's a great way to take information that you're learning from webinars such as this and applying it to pro bono cases. The way to find a pro bono case is to go on our pro bono portal, and that's on our website. If you're awake in the middle of the night and you feel like you need to help somebody, jump on our pro bono portal on our website because it's there 24 hours a day. Michael, if you'll move to the next slide. This is what it looks like. Our cases are categorized according to the type of issue, and so the little blue box is tax. Even though the box is very tiny there, it is certainly not a small part of our work, so definitely check that out and see what cases are available there. So next slide, please. Being a volunteer not only allows you to help someone and improve things for them, but also allows you to access to many of our trainings, such as this one, as well as different other volunteer opportunities. So our trainings are generally recorded, and you can find them. They are available for they are available to our volunteers, and I'm happy to share those with them. So next slide, please. So again, lots of free trainings, not only in tax, but also in various other areas. And these trainings are recorded and are available to our volunteers. So next slide, please. Okay, so if you're not an MVLS volunteer, I do encourage you to sign up. Our volunteers, even though our name is Maryland Volunteer Lawyers Service, we do welcome also CPAs as well as enrolled agents to be tax volunteers, because we know that the IRS recognizes you to be able to represent clients just the same as attorneys. So please join us. Next slide, please. And then with that, I'm going to let Michael take it over. So thank you, Michael, for joining us today.
Yeah, absolutely. Janice, thank you for having me. And MVLS, congratulations on 40 years. That's an incredible amount of time. Everyone that is available to take a case, I please ask that you do so. The portal makes it incredibly easy to see what the inventory is and kind of work through and see what type of case you'd really like to help out with. So please jump on the portal. These slides will be available after the slideshow. Click on the links and kind of go from there. All right, my name is Michael Mourges. I'm a senior associate at Crepeau Mourges. We just opened a new law firm here in Hanover, and we're really excited about getting off the ground. We mostly work in the tax controversy, business, and business litigation fields. So pretty much anything that a business needs, we try and help it out with, especially when you're in that litigation or IRS realm or Department of Justice realm. But today I'm going to walk you through PPP 2.0, the Paycheck Protection Fund, kind of the new things that are going on. I think my main point today is to point out some of the differences between the first draw of PPP compared to the second draw of PPP, some of the things that went well, some of the things that didn't go well, and then also to kind of try and help you to troubleshoot any of the applications you're looking at, or maybe one of your clients has come back to you and said, hey, my application didn't work. Can you kind of help me and find out what's going on wrong? So I'm going to work through that. And if you have any questions, please use them in the chat box, and I'll try and answer them at the end. All right, so the Paycheck Protection Program, this is the second draw. So the Small Business Administration, in consultation with the U.S. Treasury Department, reopened the Paycheck Protection Program for first draw loans, as well as second draw loans from January 11th and January 13th moving forward. Right now, I'm seeing a ton of loan activity that's going through, and most of the application process. I have gotten a couple of people funded already. One of the things I've noticed too is just because you didn't apply for the first PPP draw doesn't mean you can't apply for the second PPP draw. So you would just submit that first application for the second draw. And this window is open until March 31st, 2021. And one of the basic requirements is that the applicants had to be in operation on February 15th, 2020. So unfortunately, Crepeau Mourges doesn't apply, but a lot of the other firms do that have been working through these. This time, $25 billion has already been set aside for the second draw, and it's eligible borrowers with a maximum of 10 employees for loans of $250,000 or less. I think I'm seeing the first time the PPP funds opened up, it was kind of like this crazy run. Everybody get their lender as fast as they can, submit as many applications as they can to try and get the funding as quickly as possible because nobody really knew what was going to happen. This time I'm seeing it being much more organized, much more streamlined, and a better understanding. And I think that's mostly due to two things. I think the SBA did a really good job of kind of narrowing what they wanted this time. And then I think the bigger thing is that lenders kind of already operated in the craziness of the first PPP draw, and they kind of knew what was coming for the second PPP draw. So they had streamlined procedures to say, all right, this is what your application looks like. These are the things missing from your application. These are the type of checks we are running to make sure that we don't kind of get stuck with these loans. So I think this time it's going much better than the previous PPP draw. So the second draw loan details, which are a little bit different than the first draw loan. We'll talk about the 25% rule. We'll talk about the NISCS code of 72 and what that kind of means for restaurants. But the whole backdrop here, and I think a lot of times the way this kind of connects in my head, is that the loan is designed to provide a direct incentive for small businesses to keep their workers on payroll. And by doing that, it was kind of helping out the states and local governments from having an overburden in unemployment system. So they wanted to keep people employed. That way they didn't apply for unemployment and kind of have that backlog of trying to get everybody their funds and everything. And of course, PPP loans can be used to help fund payroll costs, including benefits, and may also use to be paid for mortgage, interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. So most of the people I'm seeing are using to fund payroll costs, make sure their employees are still being paid and kept on record, and kind of hoping that this vaccine can kind of get to everybody over the next 3 months so that this is kind of the last time through. So trying to make those loans last. So the loan details, the loan has an interest rate of 1%. I think it's always interest if it was issued prior to June 5th, 2020, has a maturity of 2 years. And if the loan's issued after June 5th, 2020, has a maturity of 5 years. And this is if your loan forgiveness is not, if your loan is not forgiven, basically, it turns into a loan and you kind of have to pay it back. If you do have to pay it back, loan payments are deferred for borrowers who apply for loan forgiveness until the SBA remits the borrower's loan forgiveness amount to the lender. If the borrowers do not apply for loan forgiveness, payments are deferred 10 months after the end of the covered period. That's either 8 weeks or 24 weeks, depending on when you applied. And this is applying to the first draw. The second draw most likely is going to be that 24 weeks, just because it usually works out a little bit better. One of the most interesting parts of the loan is that there's no collateral or personal guarantees that are required. So it is a business loan. And to some extent, it is free money from the government to keep people employed. And I always find it interesting, neither the government nor lenders will charge any small businesses fees, so no applications fees, anything like that. If you are seeing those, it's incorrect. I would be careful with your lender. And I think that's a caveat to kind of add through this entire thing. As I was preparing for this presentation, I was just looking around the internet and seeing kind of what's out there. And there's so many lenders that are out there right now. And I think it's the next slide that has a list of certified lenders that you should try and work through. But just be careful what you're applying for, the type of information you're giving out, because the PPP application itself does have a lot of information on it. You don't want that information in just anyone's hands. So who may qualify? It's a lot easier to decide. I think the way that this is set up is that everyone kind of qualifies unless you're specifically designated as not qualifying. So sole proprietors, independent contractors, self-employed persons, those are usually the Schedule Cs that you see. Any small business concern that meets SBA size standards, of course, too. And also nonprofit organizations. I've had a bunch of questions from either organizations or other nonprofits about their eligibility and kind of how they can get funded. And this is what I alluded to earlier. So any business with an NISC code that begins with 72, which is accommodations and food services, that has more than one physical location, employs less than 500 people per that location. And of course, that's subject to the consolidation rules that we could kind of work through too. I think on the next slide I have broken down, it's further down. So the 72 code, I'll show you further on who that is and what type of businesses those are. There's two ways to find your NICS code, and I don't mean to jump forward here, but you can either look at your corporate tax return or Schedule C individual tax return in the upper right-hand corner, it has it. But there's also a database that you can look through that I'll provide the link to also, so you can determine whether or not you have that 72 code and whether or not you can get an additional funding. So who does not qualify? I think this is kind of interesting too, because it shifted slightly from the first PPP draw. And I think part of that is the SBA and the government saying, all right, we have some people in here that probably shouldn't have been in here. So the first one is a business concern or entity primarily engaged in political activities or lobbying activities. Political or lobbying activities kind of make sense, especially when you get down here with the entities in which the president or vice president or head of an executive department doesn't really qualify. And I think that's almost to stop like the kind of insider dealings that kind of look bad from the outside. But I think a growing business concern, right? Can your business continue to operate? I think that's what a lot of small businesses owners are going through right now to say, are we going to be able to continue to operate for this next 6 to 8 months? Is this going to have a prolonged effect on our business? Because I think a lot of small businesses right now, your mom and pop shops are really hurting. I think their gross receipts are down somewhere in the 60 to 70% range just through the applications I've been looking through. So I think it is a tough time period. Certain entities organized under the laws of the People's Republic of China or the Special Administration Region of Hong Kong. It's kind of interesting why they would specifically exclude those, but interesting. Foreign Agent Registration Act is interesting as well. A person or entity that receives a grant for shuttered venue operations under Section 324 of the Economic Aid Act. So a lot of times it's either kind of one or the other. If you're getting a grant and shutting down or things along those lines, you may not be eligible for PPP funding. But for the most part, what I'm seeing is that everyone's kind of operating just on a decreased level. They're trying to hold on to their employees as much as they possibly can, and they usually do qualify. So subsection EF9 provides that an entity that has previously received a second draw may not receive another second draw loan. And I think this is something that's not really as prevalent as much as the first draw was. So going through the first draw, there was kind of this mad rush to get to your lender and kind of get yourself in line for the SBA funding. And I'm not really seeing that this time. I think it's much more organized. Like I said, I think it's the lenders being more organized and understand what's going on as much as the SBA kind of, we've been through this before and we're kind of going through it again. In addition, E9 provides that an entity that has previously received a second draw loan may not receive another second draw loan as required, right? So you only get one first draw loan, you only get one second draw loan. It also prohibits that any permanently closed, if you're permanently closed, you can't receive the PPP funding. Again, that goes back to kind of what's the overarching theme of this entire program, and that's to keep people employed and keep your workers kind of going. These are my two on the bottom here about criminal acts of owners, and what about delinquent business licenses through the state of Maryland? So I've had a couple of my clients who had either lapsed or delinquent business license and they couldn't get funding. So that's kind of interesting. That's one of the back end checks I think lenders are going through right now to say, all right, is this business up and running? Do they have their business license up and running? And then kind of going from there. I will say, like, getting a business license back up and running, you're either going to have to deal with the comptroller, the Department of Labor, some other type of administrative agency to kind of get it back up and running. So I don't think it's the end all be all to say, oh, I don't have a business license running right now. I think you just need to reach out to the respective agency and get it up and running before that funding can occur. Criminal acts of the owners, there's two questions that are on the front of the SBA PPP first draw as well as the second draw application, asking if the owner has been convicted of a felony in the last 5 years that basically involved fraud or bribery, anything along those lines. And the other question asks if the individual that owns the company is currently incarcerated. So it's kind of an interesting delineation there to say, if you were a bad actor in the past, we kind of don't want you applying for the PPP funding this time. And at the end of this presentation, I'm walking through some of the fraud that is actually occurring. And it's really, really interesting to see kind of what the SBA is going after, what they're kind of seeing, and what they kind of want to stop. But I think those are two of the interesting things that I've seen is the criminal acts of owners, checking that Maryland Judiciary case search to see what their background looks like. And then the same thing, those business and delinquent traders license. You can look on the Maryland business entity search, see if it's up and running. And then you can also inquire to see why it's not. So those are things to kind of think of. In a perfect world, when I get an application in and when I'm going through the process, I check these things first, because the last thing I want the lender to come back and say to me, yeah, you submitted this, it looks great, but we have all these problems. So I try and get my applications as streamlined as possible to get the lender to do as little as possible so that I can get in line and get my client in line for that SBA funding. So I have a checklist that I kind of run through. These are the things that are on my checklist. I would suggest adding them to your checklist too if you're kind of running through them, or even if you're consulting with a client to say, hey, does this apply to you? Has this happened? Maybe not the most comfortable conversation, but certainly something that is worth discussing. So I found this to be one of the most interesting parts of this presentation today. So a lot of people, after the first draw, you have 10 months from the end of the covered period to ask for loan forgiveness. And for the most part, if your loan was under $2 million, we're seeing that the loan forgiveness that goes through pretty quickly without too many hitches, assuming you're using the simplified forms and you filled out the forms correctly as well. Any loan that's over $2 million that we've seen is kind of being held up because I think there's additional checks that are going on with the SBA that I'm not really privileged to. And a lot of times, if you're in that category or you've submitted your loan forgiveness and you're under that category, you're under the $2 million, but your application hasn't been approved, you might be called an unresolved borrower by the SBA. So what that basically means that either the SBA has some type of inclination that you weren't either eligible for the first draw and still received funds, your application was ineligible and you still received funds, something in the process kind of went wrong. And the SBA is now looking at it and saying, hey, this kind of happened the first time, let's not go through this again. The one thing I would say and caveat to that is that this is not the end all be all. I think some of the people that have been listed as this unresolved borrower have communicated with the SBA and said, this is what happened the first time. I had 1099 independent contractors on here. There wasn't a ton of guidance, et cetera, et cetera, et cetera, just kind of explaining what happened. So I don't think it is the end all be all if you're on this unresolved borrower list. But if you do get this letter back from the lender or from the SBA and it kind of says that, I think that's interesting. I also saw this on an EIDL loan over the last couple of days. EIDL is the economic injury loan that is also kind of paired with these sometimes, which seems like it's getting back up and running. But I think this is something to watch out for too. If you're submitting these applications or reviewing these applications and you see this unresolved borrower term kind of pop up, I think it's best to investigate that first PPP loan, see what the documentation submitted was, and then kind of resolve it from there. See if it was submitted incorrectly, see if the loan forgiveness was submitted incorrectly, things along those lines. But something to note, something to kind of put on the back of your mind, and if you see it, refer to the presentation, look through the sites that have been provided here and kind of go from there. But something that everybody should know that are kind of working through these. So here's the 25% rule. The biggest change, or one of the biggest changes between the first draw and the second draw, is that in one of the quarters, so in this example, in the profit and loss statement on the right, I provided April to June of 2020. So the second quarter of 2020, this person had more than a 25% decrease in gross receipts. And I want to make sure that I'm clear that it is in gross receipts. It's not the net income of the individual or of the company itself. It's that, all right, we were making $100,000 this quarter last year, and this year we made $50,000 this quarter this year. So that 25% decrease makes you eligible for the second round of PPP funding. Without this 25% decrease, you are not eligible. Most people I am seeing are eligible because, like I said, I think businesses are down around 60% across the board. But every once in a while, you do have that essential business that's doing construction or is delivering some type of goods, or a restaurant even sometimes if it's really doing well on the takeout side of things, that's not eligible anymore. So all the applications that I have submitted have had to include this profit and loss statement. Don't be shy. Be free to steal mine and kind of recopy it and go from there if you're submitting these applications or you see somebody that's having a problem with their application. So that technically, and this is my second bullet point here, for loans with a principal amount greater than $150,000, the applicant must submit documentation and/or information to substantiate the 25% rule when applying. The lenders that I've been working for have been asking for this information up front. I don't see a big deal with providing it because either you're going to have to provide it now or you're going to have to provide it later. And I think it's good for you to check on the back end to make sure that your client is actually available for the loan. And that's something you need to have a conversation with them about, is that we're all hurting. This has been difficult on everybody. There's brighter days ahead, but at the same time, we have to make sure we're following the rules and regulations as outlined by the SBA. So this is a great way to go about it. Double check your numbers. I include this printout in almost all of my applications, and I'm also looking through bank statements and other ideas to make sure that I am substantiating it correctly. So One of the things, like I said, the unresolved borrower is a huge thing to take away from this presentation. I think the other thing is the second draw, the 25% rule, specifically this profit and loss statement, including it in your applications and making sure it is correct. And again, I write down here, so each lender processes these applications differently. If you're under that $150,000, technically they don't have to ask for it. The lenders I've been working for have been asking for it. So like I said, every lender's different. Just because they don't ask it for it up front, they might ask for it in the back end too. So something that you should have on file either way.
So Michael, I'm sorry, a quick question about that. If you'll go back to that slide. So this is a 25% drop in revenue only, right? Not, yeah. It's not like your final net profits, or, you know, because that can depend on how much your expenses are also, right? So if you're not spending as much because you're not working as much, your net may not have changed 25%, but they're not looking at that part. They're just looking at the actual gross income that comes in.
Correct. It's kind of confusing because they use income, and when somebody thinks, or I think of income, I think of net income. That's the account that comes out of me, but it's really a gross receipts test. So as you can see, it's income, sales, shipping and delivery, Square income, which is a credit card provider, unrecognized income. So it is that gross receipts. Everybody's expenses are down across the board. I think their employment workforce is also down across the board too. So if you're looking at a Schedule C, or if you're looking at the front of 1120, or even a net like a cash flow statement that somebody's provided to you, it might not always apply. It is that gross receipts test. It's how much money is actually coming into the company right now for a specific quarter, and are we down 25% in that specific quarter? I'm noticing, and I think why I put this profit and loss statement from April to June 2020 is because that's the quarter that everyone was really far down. So in March of 2020 was when the pandemic kind of got kicked off, and at least I got sent home from the law firm and started working home. And I think that's when business kind of took a pause. In the same aspect, I think a lot of people are going through the same thing. Going through the same thing in 2020 and saying, all right, this is the same thing. We're having the same problem in March, April, May, June of that quarter. So I think that's the first place to kind of start when you're looking for those types of items. But it is a gross receipts test. It is not a net income test. Expenses are down across the board, but it's the gross receipts that you need to focus on.
Thanks for clarifying.
So here's the other big change in the second draw, an NISC code. An NISC code is a classification within North American industry classification system. The NICS system was developed for use by federal statistics agencies, and I'll get into this a little bit later, for the collection, analysis, and publication of statistical data related to the U.S. economy, provided on applicants' tax returns. There's also a database at NAIC.com. So if you don't have a corporate 1120, if you don't have a partnership return of 1065 or a Schedule C, which the NICS code is generally on all of them as long as the return is prepared correctly, you can go to NICS.com, search for the company itself, search for a general industry in which you think the company operates, and determine what the code is. So why does this matter? NISC codes that start with 72, and I think the next slide here is exactly what 72 are, receive 3.5 times the monthly payroll. And I'll walk through how to calculate the payroll quickly. But basically what happens is, how much do we pay our employees during the year? Were they all under $100,000, or let's cap it at $100,000. Divide that by 12 because there's 12 months, and then you generally multiply it by 2.5 because that's the PPP funding is generally to fund employees for 2.5 months or 24 weeks. Now, if you have this 72, which is generally your restaurants, then you get that 3.5 times the monthly payroll. So I think this is recognition by Congress that, hey, our restaurants are really, really struggling. We're struggling with indoor seating, especially during the winter months, assuming you're in the Northeast or the northern part of the United States. And this is kind of their way to help those individuals. So I think it's something that's really, really interesting and kind of receptive on Congress's part to say, all right, we realize that the restaurants are really struggling. Let's add this 3.5 in to keep people on here as much as possible. Has interesting ramifications with the unemployment, and I think some of the servers and people that work at restaurants that are currently collecting. The tax lawyer and nerd in me. So NICS codes, a lot of times if you hear me present, I talk about this discriminant index function, the DIF score of a tax return. Audits that are usually picked up have very high DIF scores. The higher a DIF score is, the more likely you have fraudulent items, not fraudulent, misstated items on your tax return. The DIF scores are also based on NICS codes, or I believe that they're based on NICS codes. I've never worked for the IRS, and I don't know the special sauce, but I imagine that they are. And my point to this entire thing is that this is how the IRS and other government agencies are kind of monitoring your business and watching how things are going and comparing you to the rest of the industry in which you operate. So I find that stuff to be interesting. I love the diff score kind of calculus and what goes into that too. So just an aside from a tax guy. So here's your 72 codes. Hotels and motels, casino hotels, bed and breakfast inns, travel accommodation, RV parks and campgrounds, recreational and vacation camps, rooming and boarding housing, dormitories and workers camps, food service contractors, caterers, mobile food services, drinking places. I don't know what that is. Full service restaurants, limited service restaurants. I read an interesting article the other day on the difference between the two. It's worth a Google, but I don't think I have too much time to get into it now. But cafeterias, grill buffets, and buffets, snack and non-alcoholic beverage bars. So this is what's been identified as the ones that are hurting the most. If you see these on one of your applicants, on one of your clients' applications, it's that 3.5 multiplier than it is the 2.5. So again, something just to keep in mind if you're working through these or seeing someone else. So second draw, how to calculate a loan. I'm going to go through these fairly quickly because I feel like I've talked these to death, and I think this is one of the first things that everyone struggled with and kind of has gotten over since then. So if you look at, my next slide has a Schedule C. So on the right here, I'm not sure if you can see my mouse or not, but on the right side is a Schedule C from 2020. It's a profit or loss from business. You see these a lot for individuals who are in the company, independent contractors, things along those lines. To the left is the second draw PPP application. You can see in the middle is the attorney monthly payroll times 2.5 or 3.5 for NICS codes of that, and the total number of employees who are currently employed with the individual. So generally what people do, and what I've been doing, is taking the Schedule C, going down to line 29 and say, all right, this is our tentative profit or loss for the year. You're going to take that number, divide it by 12, and then multiply by 2.5. That's generally the understanding of how much an employer or employee of the individual gets paid. Now, there is a caveat. If you have contract labor, which is on line 11 right here, and you're employing individuals during the year, usually you're submitting those 1099s or you're submitting W-2s for employees. Obviously, that's going to change the calculus of what's going on here. So again, a self-employed individual with no employees is going to have a little bit different of a calculation than someone who has employees or currently has independent contractors, right? So again, different things that are going on here, but generally these are the forms in which you are operating, the Schedule C right here, and then also the Paycheck Protection Program application here. And earlier we talked about the convictions and the previous felonies. That's on question 4 and 5 down here on the bottom, and something I would screen or talk to your clients about beforehand. Going back. So I think I covered this for the most part. If the amount is $100,000, you have to cap it at $100,000. Again, I think the thought process behind that is like, let's keep everyone employed. Let's not really make sure that people making above $100,000 are being compensated, because that's kind of not the purpose of the plan. There's also, like I said, if you have that EIDL, the Economic Injury Disaster Loan, going on at the same time. So the EIDL loan in the beginning, when the PPP funding came out and everyone was applying for these, the cash advances came out pretty quick, usually somewhere between $2,000 and $5,000, but actually getting the EIDL loan itself and getting it processed kind of took some time. And that's what I'm seeing that's being processed right now by the SBA. I've had 2 over the last 2 weeks where somebody's come to me and said, oh my God, they responded to my EIDL loan request. How do I kind of get this up and running, and making sure I can get that too? So separate and apart, but also kind of the same, something to be interesting in, something that kind of catches my eye too. Again, Schedule C, as well as the SBA PPP application for the second draw. Note the second draw and the first draw of the application is slightly different. If you did not apply for the first draw, but you want to take advantage of PPP funding in the second draw, you actually need the first application. If you notice, the second application also asks for the SBA loan number. Obviously, you're not going to have that if you didn't participate in the first draw. So just a small semantic there. And again, that might be different depending on the lender too. If you can put NA in some of these fields or just kind of change it. There are some questions or certifications on page 2 of the form that are different as well. So you need that first application if they didn't get funded the first time. So this calculation is a little bit different for S Corps and C Corps, right? You're not going to have that Schedule C. You're going to have an 1120, or more likely your 941s. So your 941s are going to list the total amount of wages paid during a specific quarter. Now, I didn't mention this before, but the funding on the second draw can either be based on your 2019 941s or your 2020 941s. So a lot of times we've been looking at it and say, okay, in 2019 we had a little bit more employee payments because we had more people employed, like the economy was just running better. Whereas 2020 we had less people employed, and thus our 941 wages paid are smaller. So then our PPP loan would actually be smaller too. So I always try and get the 941s for 2019 and 2020, double check them against each other, see which kind of reduces or creates the biggest result, and kind of go from there. The only thing you need to be careful on the back end is that if you had a very, very drastic swing in the number of workers employed, you might not be able to spend all the money in the 24 covered week period, right? Because you're capped at $100,000. So that kind of backs into, and I actually had that scenario about a week ago where I said, yeah, you're available to get the extra funding, but I don't think you can actually spend it. So then it's the conversation of, are we going to go for loan forgiveness, or are we going to say a portion of this just needs to be paid back and we'll take the additional funding because we're hurting so bad? I think that's part of what we're doing here is advising clients on the best way to move through the process. But my point being, for C Corps, for your S Corps, it's the 941, not the Schedule C, that is the main qualifier. Like I said, I usually take all the wages, add them up, divide by 12, multiply by 2.5, and that kind of gets you your number. Of course, there's the EIDL consideration again, but I don't see too many EIDL loans. Or if I'm seeing EIDL loans, they're just getting processed now. And again, the same SBA PPP application on the side. And this screen's kind of doing the same thing. This is from the SBA website, so this isn't just my craziness that I'm putting up here. This is actually provided. It kind of walks you through exactly how to do it with capping it at $100,000 and making sure you're getting to the end result. The one thing I would say, at least the lenders I've been working with do a very, very good job of checking this number, checking the 941s, checking your Schedule C to make sure the amount is correct. And what the really interesting part of this, and when I get to it at the end here in a few slides, is that the fraudsters who are currently being investigated by the SBA or the DOJ or whoever's kind of in charge of looking through that is most of these people are fabricating returns. Pro forma returns, I always try and stay away from. Fabricated returns, I think, are the real issue. And I think there's some people that were just rolling through one after another and trying to get as many lenders on board as they can while applying for the EIDL loans. But let's hold that off. But if you have an S Corp or a C Corp, this is a step-by-step process. Lenders are doing a great job of checking this too. Again, the 941s, that's a key document. All right, so first draw loan forgiveness. Right now, a lot of my clients are coming up on the 10 months after the covered period. So your covered period was either 8 or 24 weeks, depending on when you applied. If you were in that first batch, you most likely have the 8-week time period. If you're in the later batch of the first draw, then you're most looking at that 24 time period. So after the end of the 24-week covered period, count out 10 months, and then boom, you need to submit your loan forgiveness documents. The loan forgiveness documents are pretty straightforward as long as you apply for the, this is the 3508. So the 3508 is your loan forgiveness document that needs to go to your lender. There's a 3508 EZ, and then there's an expanded 3508 that includes this PPP Schedule A. If you can use the abbreviated versions, you always want to go after that because they're much easier, much simpler, and it's going to be a much easier process for you. The Schedule A breaks down the compensation that's paid per individual, and I believe I talked about this on the last webinar we did, is that you have to maintain the full number of full-time equivalency employees, and that's kind of a term of art because part-time employees do go into that calculation too. So you can't say, all right, I applied for my second draw of PPP funding and had 30 employees, and by the time I reached the end of my covered period, I had 5. Like that's going to cause you a problem on the 5508. You're going to have to go through a Schedule A to kind of figure out exactly what's going on, and maybe even have to pay back some of the loan. So I think an important part of this is once you get that once you submit that PPP application for the second draw, you can't really fire your employees. You got to keep them on board, make sure you're still paying them. Otherwise, you're going to look at some type of loan forgiveness information at the backside of this that's going to be complicated. Going backwards here. So again, employee and compensation levels are maintained for the most part. The loan proceeds are spent on payroll costs and other eligible expenses. I think most people have done that really, really well. I think they spent it on payroll because they wanted everybody to kind of last. They also spent it on rent, which is what I'm seeing a lot of too. At least 6% of surveys are spent on payroll costs. And then the last bullet is within that 10 months, which is huge because you don't want to miss a deadline and all of a sudden be working backwards or against yourself to try and get the loan forgiven. So the second draw loan forgiveness, I haven't seen too much because obviously we're pretty far out from this. Everyone's just getting their second draw and applying for their second draw right now. So this is going to come up in 2022 or in the end of 2021 before we see additional, probably, I'm sure there's going to be additional guidance on what to do and kind of go from here. But it's generally the same. You've got that 8 to 24 week covered period. Employee and compensation levels are maintained in the same manner. The loan proceeds are spent on payroll costs. I'm seeing almost everyone being ready for that right away. They understand that this is the way to pay for their payroll costs, and that's what they're using their money for. That's really not what I'm seeing as an issue. The unresolved borrower, I think, is more interesting, is that maybe your application was wrong or the way that you tried to forgive your first application was wrong. So I think that's more prevalent than the loan forgiveness on the second draw. We're just not there yet. So loan forgiveness, first thing you do is contact your lender. The 3508 EZ is the best way to go about this, but don't go out and fill out their 3508 first without contacting your lender, because a lot of the larger banks, I think I saw this with Wells Fargo and Bank of America, have their own kind of software set up on top of the 3508 to help you kind of walk through it. So if they have that software set up on their website, definitely take advantage of it, walk through it. It's going to be easier than filling out the 3508 by yourself, and kind of go from there. And I think you want to make it as easy on your lender as possible, because they're just processing and doing so much of the legwork here, that you want to make their life easier. And that's always kind of been my goal too. So like I said, just to recap, don't go after the 3508 right away. Contact your lender. Smaller banks and smaller lenders are going to make you fill this out. Your bigger Wells Fargo's, Banks of America, they most likely have the software on top of their system that basically pre-fills the form for you after submitting some of the documentation. So you fill out your 3508. And this is the 3508 full version with the Schedule A. If you're getting into the Schedule A and talking about full-time equivalencies and the number of employees employed and stuff, it's best to slow down and probably get some help with it, or at least talk to somebody about it, because it is a complicated form. Whereas if you're in the 3508 easy world and the software on top of it, I think it's a pretty easy task. So a big part of this too is compiling your documentation. You're going to submit the 3508 or use the software that the bank has provided, and then you're going to submit some documentation to prove how you spent the funds, right? Basically, a lot of people, the SBA requested that people open up new bank accounts to use the funds so that it was a very clean from an accounting perspective. Most of my clients weren't able to do this because a lot of people have their payroll hooked to a pre-existing bank account. So it's just too hard to get that payroll set up on another bank account in such a small period of time. And I think almost all my clients went through that. So what they did is they used the same bank account that they've already had established, which from an accounting perspective and from a substantiation perspective made life a little bit harder, but it just wasn't possible in such a small period of time. And I think businesses were hurting so bad that this is kind of where it came out. So I think it's prevalent that people are contacting ADP, using their QuickBooks records. Bank account statements are always good too, although it might be a little bit more complicated if you didn't open a new account. But I think the general gist is, how did you spend the money? Right? Where were your rent payments? How were your rent payments paid? How was your mortgage paid if you own the place where the business sits? How was the payroll records? ADP does a great job of printing them out. Their website's also very interactive, so you can go in there, pull for a specific period, and kind of go from there. But another part of this I always say is, all right, so you've got your 3508 filled out, you double or triple checked it, and now as Exhibit A, you have your payroll records. Make it as easy as possible for your lender. Have it as streamlined as possible so they're exactly kind of flowing with you to see how the money went, and kind of keep it as simple as possible from there. And I think to a certain extent, the accountants out there, the attorneys like me who are working through these processes, they're kind of invaluable because it makes it easier on the business owner who's already struggling with so many different things, right? How do we keep the doors open? How do we keep the employees' payroll and salaries going? Did I spend everything in the 24 weeks? Things like this. Getting the loan forgiveness is huge. It's a huge part of the PPP funding in general. And it's something that you don't really want to fight about if you don't have to, and especially if you're not doing anything nefarious. So I think that's step one. And step two, I always think a really good packet that's really clean and very easy to read is great for the lenders, and that I know they appreciate it too. So this is what I spent a good bit of my time doing yesterday, is seeing how I found it interesting to see how the second draw compared to the first draw, how they changed who was disqualified basically. And then I wanted to see, how was the fraud taking place? What were people doing in the marketplace that kind of made the SBA raise an eyebrow and say, we got to fix this, or we got to close this down? So $4 billion in potential paycheck protection fraud identified. On September 1st, 2020, the select subcommittee identified more than $4 billion potentially fraudulent PPP loans and referred them to the Inspector General at Treasury and SBA for further examination. So far, the Justice Department has brought criminal charges against more than 80 people accused of stealing $127 million from the relief program. In more than a dozen interviews, so I found this really, really interesting. In more than a dozen interviews, bank executives described the fraudsters' methods. Many attempts were lazy and unsophisticated, like listing employees who made the same salary. Others had many employees collecting a monthly paycheck of $833, which reflects a $100,000 salary. So they bumped it up as much as they could, even though their employees weren't making that. So you've got the set of books that show exactly what the employee was making, and then you're creating a second set of books that shows that $8,333 per month. So it increases the PPP funding based on a $100,000 salary. So let me get to the next one. The fabricated documents were also common. Doctored payroll lists, fake business tax returns, and modified bank statements. Modifying bank statements is never a good idea. One lender who asked for anonymity describing her company's securities measures used a software tool to detect alterations on PDF files, and it flagged thousands of forgeries. So what I found interesting in my takeaway from this was that maybe your PPP application on the first time was wrong. Maybe the loan forgiveness documentation you submitted was wrong, and you got hit as one of those unresolved borrowers, and your second PPP application is being held up. That is very, very different from what I'm talking about here. These changing the underlying documents, changing your payroll, this is fraud. I would say this is almost the epitome of what you would think of. And I found it interesting that this is the way the SBA was kind of going about this, because they're looking to say, all right, was the documentation you submitted that fraudulent? Not did you make a mistake? And I think understanding the difference between the two is huge when operating through this process, because everyone makes mistakes. This was happening so fast, especially on the first draw. It was hard to catch everything that was coming through and making sure the applications were correct. And that gives me pause all the time, but at the same time, as long as you're not modifying records, as long as you're not looking through bank statements and changing them, which I don't think anybody ever really does. Obviously, people do it, but as a professional, I think everyone kind of has that understanding in their mind that this is the way to go. But this is what they're looking out for right now. It's interesting that there's so many. I think this is something that's going to be very prevalent over the next year to year and a half, because I think people see free funding and they understand the process by which to go through it. Maybe they understand what the lender is checking and not checking. And then they're going to create the documents that kind of exemplify that and kind of jump through those loopholes. So criminal complaint against a man in Hawaii, blusters and threats was to describe the fraudster's methods. He obtained $12.8 million in loans from the program by lying about his company's headcount, payroll, and according to prosecutors. When a local bank hesitated to approve his application, and I think this is one of the most interesting parts, Mr. Cow barraged its employees with emails, claimed he worked very closely with government officials, and demanded to know if the bank's executives were willing to get a call with Congress. A few days later, the bank approved his loan. So unfortunately, Mr. Cow didn't respond to comment, and neither did his lawyer. Imagine they have more important things to do right now. But it's interesting, like threatening the lender, fighting with the lender, pushing it through. I think anybody with a mind kind of understands these and understands that it's not okay to kind of do this kind of stuff. But interesting nonetheless. I think this Hawaii case is going to be the precedent that's going to come out for another 15 or 20 or 30 cases over the next year. And I think it's going to continue to look like that. I think it's going to continue to go up to the next docket, the doctored payroll list, fake business tax returns, modified bank statements. I think that it's fairly easy to prove because they're going to have the applications on hand. They're going to be able to compare it to tax returns and other publicly available documents, or even going after documents through subpoenas or summons or other types of evidentiary tools. So I think these cases are going to be very, very hard to defend, but they're going to be interesting nonetheless. But I think they're out there, and I think they're more prevalent than people probably understand. This is my last slide. So one large on about 131,000 of approved or pending loans, ClearForce found 181 applicants had recent felony convictions. So again, this is kind of, if you're going through these loans, check Maryland Judiciary case search, check and see if the business entity is up and running and still has a good trader's license. I find it interesting that they kind of block the loans for these types of individuals. We won't get into the policy behind that. But again, something that should be watched out for. And if ClearForce is seeing it, just about everyone is seeing it. It's something you should keep your eye out for. I found this interesting too, and I think this goes mostly to the unresolved borrower type of topic that we were talking about before. smaller loans, and I think those that are $150,000 or less are really just kind of flying through the system with that Form 3508 and the substantiation documentation. But those who received funds that are over $2 million are kind of waiting for approval on the loan forgiveness side, which is slowing down their second draw. So it's kind of interesting. That's kind of the line in the sand. And I think those are the loans that are being scrutinized the most right now. And then I think you're accompanying and saying, all right, is your loan over $2 million? All right, let's go back and look at some of the documents that I have on the previous slide. Are we looking at fabricated documents? What type of public information is available out there to see if these are fabricated documents? Maybe they're even taking it as far as looking at the NICS codes and comparing it to industry standards, which they have from the discriminant index function scores. So all things that you can kind of think about, all things that I find to be really interesting. But I think those over the 2 millions are struggling right now, and I think the second draw is going to be slowed down because of that. And I found this was in the New York Times by Era Robbins. We're concerned that we're getting to get stuck and have trouble getting our money back from the government on some loans. So, and I think this is on the back mind of the lenders saying, like, we know some weird stuff's going through here. Some of our loans we're not maybe having the time to get checked correctly, or maybe just all the information isn't readily available to check them. And it'll be interesting to see how the lenders and SBAs kind of work this out at the end. But something else to keep your mind on, or to look forward into the future outside of the loan forgiveness and the fraudulent documentation. There's more fraud associated with unemployment payments, and no one is talking about closing the unemployment programs, Mr. Robbins said. There's a huge need for more stimulus, and overall, I think the government did a really good job in the speed with which they got this aid out. So I gotta agree with him. I think the speed in which they got the aid out, the first draw was kind of crazy. I've seen the second draw be much more orderly and kind of worked out better for everyone else. But I think everyone kind of knows that, you know, this fraud is going on. Maybe the applications are incorrect, and how do we kind of do our best to protect ourselves to make sure we're not making these types of mistakes? And I think, or I hope from this presentation, you kind of take that away from you and say, you know, these are the things that Michael is looking at. And these are the applications and the types of things that the lenders are comparing them to. Now, how do I kind of implement a set of procedures to make sure I'm not making the same type of mistakes? And the last thing, the House released a report. It's about 78 pages if you want to look through it. It's not just about the PPP funding, it's about the pandemic in general and kind of the things that went well, the things that didn't go well. And one of the things it highlighted, which I found to be interesting, was that they thought the first draw was incredibly inequitable the way it was distributed based on the lender prioritizing their relationships. So maybe if you're one of those bigger companies applying for a PPP fund and you already have a relationship at a bank, you are getting that funding quicker than the mom and pop shop who stops in the bank once a month to get a check or something along those lines, a certified check. So I think that was part of on the Congress's mind this time. I think they tried to limit it with the 25% test, which I think did a really good job. But it's something that the House report really kind of outlined and detailed and said, how do we kind of fix this moving forward, because it was slightly inequitable. So something I found really interesting and kind of a different take on what we have going on here too. And I think that is it. Janice, do we have any questions or anything I can kind of clarify, I guess? That was a lot again.
Sorry, I was muted. Okay. All right. Well, very good. So again, if anyone has any questions, please go ahead and put them into the question box so that we can discuss them now. Thank you, Michael, for reviewing all this. You know, certainly a lot of information. I think there's a lot of interesting new things, you know, especially the slides about who does not qualify, you know, so I don't recall that being part of the first one. So clearly they've done some thinking about this and put on quite a few more restrictions now. So hopefully you won't be hearing about those other big companies not getting them, and maybe some of the money will go to the smaller companies that it was really meant for, right? So.
Right, exactly. The Harvards of the world getting very, very large PPP funding loans, but maybe it would have been used better for smaller mom and pop companies. But.
Yeah, which was I think that the original intent. So, so one question, and I don't know if you know the answer to this, is what is do you have any idea what sort of time frame it's taking for turnaround for these applications? Like if people are applying, is there sort of an expected time frame? So when you make your application, you're applying to the lender, and then the lender then applies to the SBA, or?
So the lender takes in your application, right? The application I had on here, as well as the supporting documentation. They submit it to the SBA, and you basically get a number that puts you in line. and the SBA goes down and funds the numbers as they kind of occur. I had 3 loans that went through on Wednesday of last week. One of them was funded today. I expect the other 2 to be funded tomorrow. So I think within a week, as long as your application looks good, you're not one of those unresolved borrowers, you're kind of getting it to go through very, very fast, which is in stark contrast to the first time where it was kind of like this feeding frenzy and nobody knew when it was going to get funded. But I think as long as you have a good relationship with the bank, whoever's submitting and filling out the applications kind of knows what the bank wants. It's about a week. Yeah.
About a week. Wow, that's really fast then. Okay. And if it's not happening within a week, then should you be checking with your lender then, or just waiting?
That's a hard question. So what I've told people this time is you don't want to fill out multiple applications with lenders. You want to be more patient and kind of going through the process. If you have a contact with a lender, it's always great to reach out and say to the lender, hey, where's my application? Have I gotten an SBA number yet? And that's kind of the key is if you have that SBA number, then your lender has done everything that they can do to get you funded. At that point, it's the Small Business Administration just moving through the list to get the funds kind of into your account. So I think understanding where you are in the process is really important. And then kind of going from there. If it's been a week or 2 and you still haven't gotten an SBA number from your lender, then I think it's time to reach out to the lender and say, hey, what's going on here? Like, why haven't I been processed? Am I an unresolved borrower? Did I not submit all of the payroll information that you need? Like, what have I done in the system that hasn't gotten me through? The harder part and what some of my clients complain about is like the really large banks, sometimes it's hard to get a hold of somebody who A, understands the process and knows what's going on, and B, can kind of help you. Because there's thousands of loans out there and only a couple people to really process them. So I think that's usually when I see it gets stuck more.
And if you are one of those unresolved borrowers, then is that something that the SBA alerts you to, or is that something that's going to come from the bank?
I think it's most likely going to be communicated through the bank, but I think this is just my analysis of the situation. I haven't read anything that specifically said this, but I think you're flagged in the system, the SBA system, that you're an unresolved borrower when you have some type of issue. I think when the lender would then go submit your application, it would get kicked back down from the SBA to say, hey, they're an unresolved borrower, we have some type of an issue. Whether or not that issue is specifically delineated, I don't know. I'd imagine it would have to be. One would think that you would have to kind of provide guidance on what went wrong or maybe the way to fix it, but I think it's generally a holdup in the SBA systems that's kicked down to the lender, and then the lender kind of communicates that to the company.
Okay, great, thanks. So we do have a couple of questions here. One goes back to that 25% reduction test that we talked about before. So the question was, does that 25% reduction test during one quarter or for all 4 quarters of 2019 compared to 2020?
Great question. To be considered eligible, I'm trying to find my slide real quick here. Here. So it is just that one quarter. It doesn't have to be a 25% decrease throughout the entire year. It just has to be a quarter over quarter change of a 25% decrease or less.
So if you had 3 quarters where there was no 25% reduction, but only 1 quarter was 25% reduction, then that would be sufficient?
You would still be okay, yes. Don't ask me the policy behind that. I don't really know. The only thing I can say is I think that second quarter was the hardest one. And I think it was where everyone was the most hit. So maybe that's their thought process. I'm not sure, but it does apply on a per quarter basis.
Okay, great. And then the other question we have is, was the round 1 covered period only limited to 8 or 24 weeks? Or did it change to round 2 limits of, I think, 8 to 24 weeks? So I guess for round 1, was it specifically 8 or 24? And then for round 2, it can be anywhere within that range?
Yeah, so it's a good question. On the first round, it was 8 or it was 24, and it was dependent on when you applied. So if you applied right away and got funded right away, you were kind of stuck with that 8-week period. I can't remember the exact date, but there is a date that is the line in the sand for it. This time, I think almost everyone is using the 24-week covered period. If you used a smaller covered period, that means you would be paying your employees a greater percentage. And as long as that percentage or amount wasn't above $100,000 prorated for the time period, I think you would be fine. So if it doesn't have to last that 24 weeks, but it can't exceed $100,000 for those 24 weeks or the smaller time period, if that makes sense.
Okay.
Can't use a 3-week covered period and pay someone $150,000 during that time period. It's basically what it's kind of capping you at.
So, but I guess for the second round two, if it's 8 to 24, it's a range then, so you could do like 18 weeks or 12 weeks or something?
Yeah, I think as long as you didn't exceed the income for the employee during that time period, I think you could use just about any amount. I haven't specifically looked at that, to be honest with you, because most people have said like, all right, I'm going to take the funds I got. This is the number of employees and divide it by 24 weeks and cut the checks from there. So I haven't seen that too many times, and I haven't had anybody specifically ask me that question before. But I think that maybe goes back to the policy of the PPP program overall, was that this was meant to kind of pay everyone for 2 months or 2.5 months worth of salary, and let's make it last for that 24 weeks. If it didn't last that long, it kind of is what it is. I don't know if there's going to be a third draw. I don't think there's going to be. So I would try and make these funds last as long as possible into the summer if possible.
Great. Okay. Okay, great. So again, anyone with any questions, please go ahead and put them into the question box and we'll try to address them. And then I thought it was interesting that they're noticing the fraud right now. You know, that seems like it's pretty quick. But it seems like with the fraud, what you were describing though was that it was the documents that were fraudulent. So it's almost as if they, and the way the banks are describing it now, it seems like the banks may have noticed it at the beginning, but then kind of continued to go through. So sort of, I guess, whose fault is it that with the fraud, you know, that the fraud was allowed? You know, should it have been stopped at the beginning by the banks who had these questions, or because the banks were being bullied by the Hawaiian man? You know,
I think the Hawaiian case is more interesting because of the bullying and then their kind of decision to say, all right, we know something's wrong, but we're still going to push this through anyway. I think that gives a little bit less deference to the lender than in other situations. I think what most lenders saw was, oh my God, we have this fire hose going off with so much water coming through. We know some of it, like it's just too much. We know some of this is not correct or inaccurate. But on first glance, like just looking through a PPP application or the first time through a tax return, it's hard to pick up on those types of things. If you have somebody who's good at kind of recreating documents or changing bank statements or things along those lines, like identifying those types of issues at the same time as doing all of these loans at the same time is really, really hard to do. And I think that's why you're seeing it on the back end to say, all right, these don't look right, or this is a $3 million loan or a $4 million loan to the same person. I think it's just running those type of analytics to say, all right, let's dive into this further. Oh, these bank records don't look right. Oh my goodness, the 941s don't match the 1120, something like that. So I think the lenders, I think this time are doing a really good job of watching everything coming through. I think it's slower. So I think they're probably doing a better job. But the Hawaii case is kind of an interesting, hey, we knew something was wrong, but we were kind of scared to say anything. And I hope that hasn't occurred as much.
yeah, definitely very interesting. So, well, it's definitely, it seems to be very different this time around than the first time around. Seems a lot slower. Seems a lot more careful and precise, perhaps. You know, the rules seem much more stringent. Seems like a tighter process. So
Tighter process, and has this feeling of we've been here before, we know what we're doing now, which I think has really, really been helpful.
So, well, great. Okay, well, we are coming up on 1 o'clock, so I want to thank everyone for joining us today, and thank Michael for going over this. You know, hopefully we won't need a third round, but it's good to know, you know, and I think certainly since many of the rules are very similar for round 1 and round 2, it makes round 2 a lot easier. So very good. Absolutely. Okay. Thank you, Michael, and thanks everyone for joining us. We'll see you next month.
Absolutely. Thank you for having me.
Take care. Bye-bye.